Welcome to a crypto market update. This video will be going over the BTC halving, post and pre, looking at the previous halving, as well as discussing the hash rate, discussing the difficulty, and the potential minor capitulation that will appear. We've been talking about this for a while. We are really being very patient for this event to really happen because a lot of people are very bullish right during the actual halving. I personally don't think it's going to be super bullish when the actual halving has taken place in the weeks or even month after it, but it's the 3, 4, 5 months that are actually after the halving that I think will have a significant impact for the price appreciation due to the limited amount of supply that is getting added onto the market, because the halving is basically taking away half the supply from 12.5 to 6.25. But when the actual halving is occurring, there is some fundamental things that we do have to go over in terms of the miners. So first off, surprisingly, initially we had that huge move to the downside with the hash rate, which is the difficulty to actually mine BTC, drop substantially, but then we got a very quick recovery, almost hitting the all-time high for the hash rate, and we are seeing a little bit of a decrease right now, but we did see a very quick rebound from the low there. So what this shows is we got, when we were selling off, a lot of miners to get out of the network, so they're stopping mining, but very shortly after, when we saw that big bounce come in, they turned back on their machines and then just started mining again, and then we saw the hash rate increase very quickly after that. And we also have a nice quote here, kind of creating and cementing that line from Ashu Swami. The miner inventory was already sitting on the rack and only just powered off. When BTC's price started rising, mining rigs were immediately turned on. If the gap between those events were longer, it would have involved de-racking, racking of the equipment, and the hash rate of recovery would not be that fast. So it's because we got such a quick move back to the upside that miners just turned back on the machine, and they were able to almost be break even or break even depending on how efficient they are. The number one thing that we want to go over is this post by BLockware Solutions, understanding Bitcoin market participants, vulnerabilities in the price of Bitcoin driven by miners. If you would like to know more about the miner capitulation cycle, mining difficulties, just more about the actual mining marketplace, really, of the different participants, and then also looking at how price and difficulty really adds to kind of the underside, the underbelly of the market. It's not just price action, but it's really understanding miners, because they're going to be the primary sellers and the supply of the market. And we can see 3 primary types of Bitcoin market participants. There's investment funds, hodlers, and miners. And sell pressure is mainly from the miners. So understanding where they are, what kind of profitability they have within their operation is very important. So we're going to quickly get into this, but I really highly recommend actually reading this whole thing. It's a little bit long, not super long, but I do find that this is very helpful in wrapping your head around understanding the different miners and how profitable they are. And it really breaks it down into each layer of different amounts of energy that's required, and then also looking at the efficiency of the operation due to the mining rigs that they have. Very interesting. We're just going to really scratch the surface of this post. So sell pressure from miners. There are approximately 54,000 new Bitcoin mined per month. If Bitcoin is trading at $10,000, that equates to 540 million of new Bitcoin supply being released to miners each month. That's a significant amount. So a significant portion of the 54,000 Bitcoin must be sold by miners to cover electricity expenses. Miners with higher electricity rates must sell a greater portion of earned Bitcoin to cover their electricity costs. A majority of the capital outflow of the Bitcoin network is driven by miners. Definitely a key thing to note. And that's why understanding what cycle we are in the mining capitulation cycle is very important in my personal view. And this is more of a macro outlook. Yes, if you're a day trader, this doesn't pertain nearly as much to a person who is a long-term swing trader looking at the major moves of BTC and just cryptocurrency markets in general. So let's dive in here. BLockware Solutions breaks it down very, very well, and it goes over different situations that we could be seeing ourselves in, looking at where Bitcoin is and then how miner health is, depending on the layers that were given for the different amounts of cost of electricity. But we're mainly going to get into the miner capitulation roadmap, which kind of sums up the roadmap of a typical miner when they are facing capitulation. So, to summarize it, and then we'll get into the roadmap here. To summarize, when Bitcoin was at $10,000, only 39.12% of the total monthly Bitcoin mined needed to be sold to cover electricity expenses. Once Bitcoin dropped to 7,500, profit margins for all miners decreased. As a result, 53.18% of the total monthly Bitcoin mined needed to be sold to cover the electricity expenses. So as the cost for one BTC goes down, as the value of Bitcoin decreases, miners are going to have to sell more and more BTC in order to cover their electricity expenses, which is the most significant expense that miners have. So now let's look at the miner capitulation roadmap and then try to see how the current price action relates to one of these boxes that we're going to be going over. So let's just go over the roadmap and then let's look at the current price action and then previous situations where we've seen this occur before. So let's see, Bitcoin approaches a miner's break-even price. The miner's margins compress, causing them to sell a majority of the Bitcoin they mine. This creates more sell pressure on the network. Bitcoin violates a miner's break-even price, causing the miner to operate at a loss. The miner must sell all the Bitcoin mined, plus they must begin depleting their Bitcoin treasury to cover electricity expenses, creating sell pressure beyond just the newly minted BTC. This extra sell pressure accelerates the sell-offs in Bitcoin and will persist until these miners operate at a loss, capitulate, so basically bankruptcy. They will deplete their entire balance sheet and go bankrupt. Can take several months. This isn't one day, this isn't 1 week. This is a long macro fundamental catalyst that will slowly work its way into the market. It's not a 1 day, 1 week situation. Upon bankruptcy / capitulation, basically the same thing, these miners finally shut off, creating a reduction in network hash rate. This triggers a favorable adjustment in difficulty. This is the key thing we're looking for, is a adjustment in the difficulty to mine BTC, which would mean a decrease in the hash rate. So once this difficulty has taken place, meaning that the hash rate has decreased, we can go to the last step. A favorable adjustment in the difficulty allocates the Bitcoin that the inefficient miners were earning to the surviving miners. This establishes healthier margins for the surviving miners and less sell pressure on the price of Bitcoin, establishing a healthier environment for Bitcoin to rally. So understanding this situation, I think that we are currently facing a very similar situation where we're kind of in between this zone here, where a lot of miners are now right at the cusp of not being able to make money. They're now below the break-even cost, and they're now selling BTC for a loss and going into their treasuries to cover their expenses for mainly the electricity. So like we can see here, this creates extra sell pressure, and it can take several months for them to actually deplete their entire balance sheet and go bankrupt. So in my view, we're in this section right here where a lot of BTC miners are in the negative, but they're still able to sustain their operation due to selling their BTC in their treasury. So understanding that roadmap, now let's look at the current price and the current operation costs of the miners that we currently see in the market. So right now, we can see that the actual price of BTC is inching closer to the cost to mine one Bitcoin. So the actual squeeze is easing off a little bit. But like we can see before, right here, it takes several months. And we can see back in 2018, we had a similar situation where the miners were really getting squeezed. The price of one Bitcoin was around the same cost to mine one Bitcoin. And we didn't really see any difficulty adjustment until we saw that massive sell-off. Now, this time is going to be a little bit different, where we saw a huge sell-off, and then now we're seeing a quick recovery. And because the recovery was so quick, these miners are able to flip back on their mining rigs and just start mining again, because they're hoping that the price of BTC will continue going up. They're able to make a little bit of money if they're a little bit lower, or they're a little bit more efficient compared to the average that we can see right here. So looking at the hash rate again, that huge drop in the hash rate, and now we saw the hash rate increase pretty quickly, pretty substantially from the lows. And we can see where you can see right here, if the gap between those events were any longer, it would have involved racking of the equipment, and the hash rate recovery would not be that fast. But because we had that quick recovery, we're seeing the hash rate increase just as fast as it went down, which is basically going to create another squeeze for the miners. So I don't think, in my opinion, we're going to get a move to the upside instantly. I think we're going to have another move to the downside. Now everyone's asking, where is it going to go down? You've been saying bearish for such a long time, and it just hasn't come. Well, this, in my opinion, is more fundamentally based, and the technicals will line up, but I'm being very patient with the market right now. I'm not looking for really any longs because of the fact that this is going to occur in my personal view. Some people say it's already priced in. Some people say minor capitulation has already completed with that move right there. But I think with the hash rate still increasing, with the difficulty not seeing any movement, I just can't see the miners having any capitulation whatsoever, and the BTC halving will only make it worse. Like we can see last time, we had a major difficulty adjustment where you see the cost to operate, the cost to mine one Bitcoin decreases substantially because it didn't see a rally right back up. We saw the price fall and hold there. That's the difference. We saw the price hold at these lows, which then basically creates a squeeze in the miners, and then they have to capitulate. They have to go bankrupt. They have to sell their BTC and just stop operation. And in this situation, we saw the bounce that was so aggressive, so quick to move to the upside. We didn't see a lot of miners capitulate, meaning go bankrupt, where we saw the revenues start to go back in their favor quick enough that they didn't need to stop operations. So you're probably asking, okay, this is a lot of information, but at the end result, where do you see the price going? Well, in my personal view, I think the weekly chart is a great option to see. And we'll talk about that after we talk about the previous halving, which was right here. So back in July 2016 was the previous BTC halving. What happened? So instantly, right, the actual cost to mine one Bitcoin basically went up by double, because you are using the same amount of energy, because the hash rate is the same, to get half as much of a reward. So it costs a lot more to get the same amount of Bitcoin post-halving. That's for the miners. And this is where, in my opinion, the true capitulation will occur, because you're basically cutting the mining revenues by half. This is exactly what happened here. So before the halving, it was pretty healthy. A lot of miners were in the green. The revenues were pretty strong, and there was not really a problem. But then post-halving, we saw that the cost to mine one BTC is actually more than it is to sell it. So on average, a lot of miners were actually losing money month over month. And we didn't see the true capitulation. Give me one moment here. This is the BLX chart. We didn't see the true capitulation until a month after the actual halving date, which is a long time. It takes a while. Like we can see here in the miner capitulation roadmap, it can take several months for them to deplete their entire balance sheet and go bankrupt. So it's not an instant turn off switch, it takes a while. So I'm being very patient, and we can see once the capitulation actually initiated and the momentum started to turn to the downside, we got a fall pretty substantial of over 28%. So yes, in the long term, we see the reduced amount of supply does make it very favorable for a bull run. And I completely agree. I think in the long term, this reduced supply will lead to a huge bull run for Bitcoin. But I'm talking for 2020, I would be very cautious personally of entering any long positions due to this fundamental catalyst within the market. That's my view. It doesn't have to be yours. You could be very bullish, and you could say that the market capitulation for the miners has already taken place due to the 50% massive move to the downside. I personally think that there is going to be another capitulation. How far? I personally am going to assume that there has to be a difficulty adjustment. So let's just create the customize. So like right now, this is the zone that we're looking at. I'm going to be looking at the low of the ascending support. So basically that's going to be a potential candle closure low, but we see a lot of wicks to the downside. So using things like OCO, or one cancels other orders, or limit orders, that you're able to catch these lows, in my opinion, would be very favorable as a short opportunity if you are looking to capitalize on this market capitulation. I personally am going to be looking for shorts. I am not looking for longs just yet. Primarily because of this fundamental minor capitulation cycle that I still think is going to play a key role in the foreseeable future. How far will it go down? I will be looking at this ascending zone for a major support zone, and then after the market capitulation, what I'm looking for is a consolidation. We can see in 2018, after the huge capitulation, you got a consolidation. You got a base to form where there's buyers holding the price up. That is what I'm looking for. We didn't really see any base in this major move to the downside. We saw a huge move down and then a rally that is creating higher highs and higher lows, but it's getting weaker as time goes on. Yes, we did break around the $7,500 zone. In my opinion, yes, it is a little bit surprising, but at the end of the day, I do not mind being patient for this next major move. And yes, we were not catching longs really on the way up. I personally do not mind. Yes, it would have been great to catch the way up and then look for shorts on the way down, riding the hype and then, buy the rumor, sell the news. But at the end of the day, I do not mind. I think that the overall structure and the bias for this potential next move is still favorable for us, and we're going to be very patient. And that is the move that we're basing our trades off of. So, fundamentally, I do think that in the long run, BTC is going to have huge price appreciations, but in the short term for 2020, for the spring, and I guess a little bit into summer here, I do not want to be long biased in my personal view. I would rather wait to see this capitulation cycle run its course. I start to see something that we saw in 2018, where you see a series of consolidative higher lows and potentially holding a resistance, or some formation where you see a consolidation sideways, where you see a huge difficulty adjustment, and then that will create and flourish the next major bull run. So that is going to be what I'm going to be waiting for. I'm going to be looking for the difficulty adjustment to come in, and until that happens, my bias is kind of not going to be changed. And I think that difficulty adjustment will have to come, like we saw in the previous halving, after the BTC halving date. So we had a pretty big hype run up, and yeah, to be surprising, we're above 7,700. A little bit surprising to me, but I don't mind. We're looking for that difficulty adjustment. We can see right here the first difficulty adjustment move to the downside. There's our first basically bankruptcies or capitulations, and then after the next wave of sell pressure, we see even more people exiting the network, more people getting out of mining Bitcoin, and then once you see a large majority of the inefficient miners leaving the network, leaving the mining pool, you only get left the most efficient miners, and that is what you're looking for. We don't see the difficulty adjustment yet, so in my opinion, it's just too early to say that all the inefficient miners are gone and we're able to basically create a very strong move to the upside due to the reduced supply in the market. I don't see that yet. I don't see the difficulty adjustment. So I'm not going to have that bias just yet. So that's basically the overview. We've been kind of doing the same videos here, and it's mainly because we're looking at the fundamental basis of minor capitulation, and that takes time. It takes several months. And if we're making videos, every other day on weekdays for specifically cryptocurrencies, we're kind of going to be a little bit redundant, because this, in my opinion, is something that's going to take a little bit of a long time to actually play out. Yes, we've been seeing 10% moves to the upside. We did see a push up breaking our descending zone. I was a little bit surprised by that, but in my personal view, I just do not want to be long, because you could move a little bit higher up. Yeah, that's totally fine, but from now until the halving, in my opinion, it's just too unpredictable. Yes, there's hype. Yes, there's news. A lot of people are bullish about the halving, but I'm having conviction of the outcome that I see, and I'm very open to waiting until the halving takes place. I capitalize on the bias that I have, and then after the halving, after the market capitulation has taken place, when we're in the lows of the consolidation, then we will start accumulating. Then we will start to see us take more of a bullish bias, and in my opinion, that is the completion of the bear market, and we'll start to see that flourish of the huge BTC bull run that we are anticipating. But right now, I'm still hesitant on saying that I want to be long Bitcoin. Day trades, not a problem, but in terms of holding for 3-4 months, longer term swing trades, I don't want to be long just yet. I want to see the price post halving capitulate, hold a low, consolidate, see that volume accumulation come into the market, and then I will be a lot more bullish. And holding your capital, being able to preserve that capital until that point is pretty important as well. And then at a certain point, in my view, this is a huge symmetric triangle that, in my opinion, will commence the biggest bull run that we've seen in a while here, but it takes time. It could be until later summer of 2020, or even in the fall of 2020, when we're really gonna start to see that bull run start to move up to the upside here. I think this is a sucker's rally. I think that we will start to see consolidating a little bit more. We're not going to see that massive move to the upside that everyone's thinking, just continuing to the upside, due to the fact that the miners still have a lot of supply within the market. The difficulty hasn't adjusted enough for me to think that there is a reduced amount of miners that are going to be dumping BTC into the market. So yeah, I'm kind of repeating myself at this point. I really hope you enjoyed the video. If you do have any questions, please drop them in the comment section below. If you found this video useful, if you found this video informative, educational, entertaining, it'd be great if you could subscribe if you found this informative. So thank you very much for watching, and until next time, have a good one, traders.